As a beginner in Forex trading, it's important to understand the different players in the market and their role in shaping exchange rates. Let's take a look at some of the most influential participants involved in currency exchange. The first ones we have to mention are the central banks and the governments. They can intervene in the forex market when the currency of their country is too high or too low, and that can cause some problems. For example, Japan is the fourth largest export economy in the world. A few years ago, the government realized the problem of having a very strong currency such as the yen. A strong currency means a higher price for the international buyers who want to buy goods from Japan. Let's say that you are in the United States and you want to buy something from Japan. The first thing you have to do is to exchange your US dollars into Japanese yen. So if the Japanese yen is very strong, your dollars won't buy you a lot of yen, which in turn means that you cannot buy as many Japanese goods as you could if the yen was weaker. So the central bank, the Bank of Japan, intervened to lower the value of the yen because that situation was causing problems to the Japanese export economy. How do they do that? They can do that controlling the money supply or changing the interest rates or starting massive buy-sell operations which in turn alter the exchange rates. Central banks and governments can also intervene to strengthen their currency. At the time of recording this lecture in 2023, we have a perfect example of this. Inflation in the United States is at 8.5%, the highest since 1982. To fight this problem, the central bank in the US, which is the Federal Reserve, is increasing the interest rate to attract foreign investments, which in turn can increase the demand for their currency and strengthen its value. We will learn more about this later on in the course when we study what is known as fundamental analysis, which in my opinion is a very fascinating topic in forex trading. For now, I won't go into detail, but there's one thing that you should know, and it is that if the government and the central bank want to intervene to alter the value of their own currency, be sure that they have a way to do it. In addition to central banks and governments, some of the largest participants involved with forex transactions are banks. The interbank market is the market through which large banks transact with each other and determine the currency price, which is based on supply and demand for currencies. These large banks take on a huge amount of forex transactions each day for both their customers and themselves. This is a chart that shows the top 10 currency traders in the world by volume in June 2020. Except for XTX Markets and Jump Trading, which are proprietary trading firms, the others are large commercial banks. So if they are buying or selling very large quantities of a particular currency, it's not hard to see how they can really have a significant impact on the currency markets. Another category of players that needs to be mentioned is large commercial companies. Large commercial companies are the bread and butter of the forex world and in many ways are seen as the most logical players because they require currency exchange for business purposes, which are mainly paying for imports and receiving payments for exports. Take a company like Apple, for example. Whilst they export their MacBooks to other countries around the world, before doing that, they need to import individual parts such as processors and microchips in order to build the MacBooks. So large companies have a big interest in the value of currencies as they import and export goods. However, the volume they trade is usually much smaller than the volume in the interbank market. The last class of market participants involved with forex market-related transactions is speculators. Speculators attempt to make money by taking advantage of fluctuating exchange rate levels, so they simply bet, if we want to say like this, or we can say speculate, in which way the market is likely to move in the future. By the end of this course, you will learn that there is a significant difference between betting and investing, and a real Forex trader invests rather than bets. So this category involves so many players, starting from hedge funds who may invest millions of dollars, down to retail Forex traders like you and me who can invest just a few dollars. Now you know the participants in the Forex market. In the chapter about fundamental analysis, we will go into more detail so you will better understand the role of these different players in the Forex market, which will help you make informed trading decisions and be a profitable trader.